at 105.7 Light FM. Morning all, we're at 20 before 9. It's 8:40.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
It's time to check in on your money and find out what goes on this morning. And the legal beagle means Philip Statler from Statler Financial Services is on the telephone with us. Philip, good morning. It's good to hear you this morning. How are you?
Hey, good morning, Dave. Doing well today. It is, we're starting the second full week of January. And, the markets were pretty happy yesterday. I'm not so sure they're going to follow through today, but not a bad day yesterday.
It looks like it's kind of a split vote so far as to how the markets are going to respond to the macro data we got. But setting the table this morning, we set three new records. Dow was up by 86 points yesterday. S&P up by 11. Those both new closing records. NASDAQ was up 62.5, and the Russell 2000 was up 44.00%. And since the day before was a record close for the Russell, I'm going to assume another increase means another closing record on the small stock index as well. And yesterday was just an absolute nothing day news-wise. Nothing really heavy happened on the news. On the other hand, today the floodgates open up. We got earnings season beginning. We got inflation numbers, and it's pretty much going to be like that all week long, isn't it?
It is. We finally have some data coming through. Today we got current data. I was looking at tomorrow's numbers, and tomorrow we go back to delayed numbers for November. For like retail sales and PPI. I don't understand how we can get the CPI for the current month, but we can't get the PPI for the current month. So it's going to be interesting.
Philip, you're trying to explain the government here. Can't be done. The thing that news this morning that came out was the consumer price index. And like you say, that's current data, which really makes it a high holy day. The top line consumer price index, as expected and unchanged, 2.7% in December, which I didn't know whether that was good news or bad news in the marketplace. It means we're not going the wrong direction anyway. We just aren't going in the right direction. But the core number that gets rid of the volatile items in the market basket, one of the tip sheets that I was following had it expected 2.7. You were expecting 2.8 from your tip sheet, and the core CPI came in at 2.6%. 0.2 doesn't sound like all that much, but in an economy our size, that's a pretty substantial difference, isn't it?
It is, Dave, and it shows, kind of that CPI going the right direction, right? Because we want that number closer to 2% or 2.5%. So, we're getting, we are heading the right direction when it comes to the core. It'd be nice to see the overall CPI head the same direction.
That would be a nice thought, and I think that might be more than we have a right to expect, but it sure would be nice to see happen at both top and bottom lines. So that's where we start out the morning. We've got a pile of reports. You mentioned that tomorrow we're going to end up getting old wholesale inflation. We're also getting at old retail sales information from back in November. And then on Thursday, we're actually going to get some employment news with the initial jobless claims that'll actually be current information. But in the interim, we're starting earnings season today, and the financials start the floodgates. It's a trickle today, and then tomorrow pretty much any place you're likely to have an account is probably going to report. Wouldn't you agree?
Yeah. I think at least by the end of the week, I think every bank will have reported for the most part.
Absolutely. And it all starts out with the overarching concern, and we'll see it when we get to the commodity prices because they're weirding off today because President Trump sicked his Justice Department on Chairman Jay Powell of the Federal Reserve over the weekend. And Powell, I was getting kind of a kick out of this while I was soloing yesterday. He's taken the gloves off. He's actually acting like a politician now and basically coming back and swinging. And now they're saying, his term as Federal Reserve Chair ends this year, but his term as a Fed governor doesn't end until 2028. And the rumor has it right now, just out of pure consternation, he might just decide to stay for a couple more years and cause the new Fed chair some more difficulties from the back row.
Well, all those Fed guys, you're out on that speaking circuit, and so he can definitely churn the waters up for sure.
Especially if he keeps his position as the Federal Reserve governor. I found that kind of fascinating down the line. Other tidbits out there today that don't affect earnings issues. The Warner Brothers and Paramount war keeps going on. Paramount's board of Warner Brothers wants to sell off to Netflix. Paramount has a hostile takeover bid, and Warner Brothers has said "Niet." Well, Paramount now has announced that they're going to take another angle. They're going to launch their own slate of directors at the Warner Brothers shareholder meeting later on. See if they can't get their own directors elected, then they'll say yes and sell to Paramount. This war is nowhere near over, is it?
No, it's not, which means there must be some very valuable assets there for these two companies to keep fighting like this.
Absolutely. With the earnings season kicking off with financials, we'd be remiss if we didn't mention another thing that came out of the administration over the weekend, and that was President Trump putting out the statement, to use his words, "Effective January 20th, I, as President of the United States, am calling for a one-year cap on credit card interest rates of 10%. Given the fact that even with some pretty prime cards they've got carrying interest rates in the 20% range, I got to believe that's making a whole bunch of the banks change underwear, and it ought to make some of the guidance statements come out of the banks this week sound really interesting, wouldn't you think?
I would, yeah. If he makes that happen, that will definitely put a damper on bank earnings, especially those big banks. Capital One is one that comes to my mind right off the top of my head, because they do so much credit card business. American Express, Discover, you think of those guys and the credit card volume that they do, it's going to put a dent in their bottom line.
Now, you and I both thought of Capital One first when that announcement came in, because they have a tendency to be willing to give a credit card to a turnip sometimes. They actually came out and said that's going to make our profit margin go down by like 18% if you do that, Bunky. And I got to believe a few of the other ones. Citibank is also a fairly loose credit card operation. I got to believe they can't be happy with that either. From 18, 20, 24% on some cards and more, all the way down to 10%. That's got to be going over like flatulence in church in the boardrooms of the bankers, don't you think?
I think so. Believe me, there'll be court filings pretty quick if that happens.
Absolutely. That move, by the way, it does kind of sort of make force of law happen. It has to go through Congress. And there have been a number of bills introduced in Congress to legislatively cap credit card interest rates at 10%. But they always get stranded in the banking committees in the House and in the Senate, and then they never go anywhere. So President Trump is basically saying, poop or get off the pot on this, and trying to do it by executive order, which isn't necessarily going to have enforceable law effect. But at the very least, just the bully pulpit pressure could very well have an impact.
It could. And I remember back in the day where, the maximum interest rate allowed on a credit card was 18%. And so, we've really, unhandcuffed the banks, and they really take advantage of lower income, middle income folks that are having to use some credit.
Oh, yeah, even my Platinum Amex, and I mean, that's not exactly an entry-level credit card. I think it's carrying 19, 20% carrying rates now, too. It's just, I'm actually kind of saying I don't think it's got any force of law, but I kind of like the concept. Speaking of the financials, first one we got out of the big banks was J.P. Morgan. How did they say they did last quarter?
J.P. Morgan, it depends on which service I look at, Dave. It's kind of interesting because I look at my CNBC site, and their numbers come in and say that they beat on earnings and on revenue. Their expected profit was $5. They made $5.23, and revenue was slightly above that as well. Their indication was here that the beats were driven by strong performance when it comes to trading operations, which means there's just a lot more trading going on. I go off to another service I use, and they say that JP Morgan, has a rare miss driven by weak debt underwriting. So I'm not sure who's using what figures, but they basically say that JP Morgan missed by just a little bit on net income and gross revenue. And they do point out that they're everything is down year over year. This is the first report I've really read that indicates year over year numbers. Their net investment income was up 7% year over year, which was good news. But their revenue was down about 7% year over year, or their net income was down 7% year over year. So all that to say is really who knows? All I know is the stock is trading down about 1/3% right now.
Conflicting financial reports, yeah, that would tend to make a person want to sell, wouldn't it?
Yeah, I guess so.
Well, it's going on. I better sell it. How about a company that knows what's going on? How are the other reports coming out this morning so far?
So we got Bank of New York Mellon. They came out as well. They reported fourth quarter earnings of $2.08. That was better than the $1.98 they were expected to make. Revenue slightly above expectations. And I need a more detailed report from them because they were trading down as much as 1.5% today. They're trading down about 0.4% right now. Not sure what's in the details that's causing that right now.
All righty. And I know the other big one that we knew was coming out this morning was Delta Airlines. Any news on the travel business looking up?
Delta had mixed results. They beat on earnings by 2 cents a share at $1.55. However, on revenue, they missed. And so that's got them trading down about 4.6% this morning.
Geez, we've got very little good news to start earnings season out this morning. Well, resetting the table, it was almost a solid wall-to-wall green up day yesterday on Wall Street with the macro information we got, plus the reports this morning. How are we doing 45 minutes before opening today?
Dave, we are bouncing around like a ping pong ball right now. When the news came out of the economic numbers, the numbers kind of bounced up. We're with some green numbers now. We've actually turned red across the board, except for the Russell. The Dow Jones is down about 16/100ths. The S&P 500 has actually just gone flat, as well as the NASDAQ 100 has gone flat. The Russell 2000's up 1/3% right now. On the other side of the coin, silver, man alive, it's up almost it just went up 3% right now. $87.65 an ounce. It is getting so close to 90. It's not even funny. Gold up about 0.2. Crude oil crossed over 60, Dave. It's up 1.85% to $60.42 a barrel. Must be Iran issues.
I expect so, given the fact that they've been pretty much rioting in the streets now for a week. I was wondering when that was going to catch up. Overseas markets, the Asian Rim market was a decidedly mixed bag. The two Chinese mainland markets both were off. I don't know why, but everybody else was basically up this morning. In the European community, I've got a lot of mixed bags, too. I got the UK markets down by about 0.5%. Italian and French and German markets are off by just a tinge. On balance, the average European index off fractionally by about 0.15% halfway through their trading day. Getting my retirement together so I can predict this junk, or better yet, avoid the risk inherent to all this junk we talk about, that takes an expert pair of eyes. How do I find you to get those eyes on duty for me?
Then give us a call at 863-382-0037 to schedule a core retirement analysis, where we'll talk about where they are, where they want to get to, and how they're going to get there. And if they have a plan in place, we'll look to see if it's going to get them to where they need to be. Again, 863-382-0037. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM, and streaming live. I always forget what that is, Dave.
newstalk730am.com.
There we go. I got the app. I got the app on my phone, so I can get it whenever I need it.
Yeah, that's right. We got the App Store as well. I will catch you tomorrow, my friend. I appreciate it.
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your day is going well. I look forward to joining us again tomorrow. Bye now.